Hey guys, welcome back. We are talking top trading tips. This is these videos, I'm not sure whether we're fourth or fifth on in a series of videos. Go back and check the other ones out if you want to talk about, we want to see more trading tips. We're just covering actionable ideas, tips, strategies, little nuggets that you can implement, put into your trading so that they can make an improvement, and you can hopefully not be another statistic of one of those guys who just falls by the wayside. These tips and strategies and kind of little tidbits that you can action on straight away are from my experience as a trader and from other traders that I know who have been in it at least a decade plus from each of them. Some of them in it longer, but it's kind of this is broad eyes, and the idea is that you take ones that you like, discard ones that you don't like, and make a decent impact into your trading. Don't forget, if you like this kind of stuff, hit the like button below, please. Okay, so what are we talking about now? Risk management. Always set maximum loss limits. What do I mean by that? Okay, let's look at it from a day trading and a swing trading perspective. If you're day trading, you definitely want to set your per trade loss. And you know what? That's the same with swing trading. In other words, each trade may be different, okay? But you must have a maximum level that you're prepared to lose per trade, because if you don't, then you will struggle. You will end up being caught out and being caught short and literally getting hammered on something that you shouldn't be hammered. You know, you say you're going to risk $500 in a trade, you lose 700. That only damages you because the 700 hurts, and your max loss should be a place that doesn't hurt. But it also means you've broken your rules, and you kind of creep into that level then of being an out of control trader who maybe can go trading on tilt. So the per trade thing, whether that's swing trading or day trading. Also, you need to know your daily, or you know, if you're swing trading, your monthly or weekly loss. Now, what do I mean by this? Now, this is going to be separate to what we'll talk about in a second. If you're day trading, it's daily loss. In other words, you know your loss per trade, your max loss per trade. You also know your loss per day. If you're doing several trades in a day, you don't want to, at the end of the day, look at your statement and go, oh, I've actually lost way more than I expected. That's no good. And then feeling the guilt and the frustration and all that comes with it. And the same with swing trading, guys. If you're swing trading, you want to keep track of what's going on. You don't want at the end of the month go and say to yourself, you know what, I've lost way more than I should do. So keep track of it. It's easy to not, especially from a day trading perspective, it's so easy to be trading, make a little bit, lose a little bit, make a little bit, lose a little bit, and then you go, well, actually, I've lost more than I should have done. So keep track of it, whether you're doing it on a spreadsheet or however you're doing it, and making sure you're aware of where you are. Now, don't get me wrong, I'm not saying be glued to your P&L. That's the worst possible thing you can do, watching your P&L go up and down. But at least being broadly in mind. And also, if you know your per trade loss and you're sticking to that as maximum, you're going to know, listen, I know I've lost three trades and I have three trades here, and I know my maximum per trade loss is 500. I've made some winning trades as well, but I know I've made three. So I know my worst case scenario is down 1,500 on the day, whatever it may be. It could be 150 for you, it could be 15,000. Doesn't matter the actual numbers per se, but at least you've got a handle on it. You're never ever going to go over that point, because in your mind, you kind of got a rough idea and you're erring on the side of caution. So then I'm going to move over here, and it's going to repeat myself a bit, but you'll see the difference. And here we've got our weekly and sort of yearly, I guess we could do if we're swing trading, maybe not. But what I mean by that, I mean that you need to keep track of, this is from a sort of short-term perspective of the time frame you're in. So monthly was for swing, daily was for day trading. Now weekly, this is for day trading here, guys. I'm going to put day trading so we're clear. And this is for swing trading here. I'll just put ST, save me writing it down. So basically we want to say, listen, we know what we're going to risk in the day. What's our maximum loss in the week? What we don't want to be doing again is at the end of the week saying, oh, I've lost way more than I expected. I'm frustrated. This is not where I wanted to be. Because at some point we have to put that stop loss in that says to ourselves, listen, don't trade anymore. You're not on the ball, whether that's daily, whether that's weekly, whatever it may be. If you're swing trading, maybe actually perhaps that's probably going to be weekly there, and that's going to be monthly, I would perhaps guess, but it depends on your time frame, right? It could be quarterly. Let's put quarterly rather than yearly. I guess that makes more sense. So monthly, And then at the quarter, you kind of know, listen, I'm not, if the market conditions are not right for your swing trading strategy, then you don't want to be trading, right? You don't want to be getting involved. Maybe you're not in the right frame of mind, or the market's just not conducive to the strategy you're employing, or, you know, there's something happening. Maybe we're waiting for elections or something that's maybe changing the market conditions. You don't want to be hammering away. You've got a set amount that you're prepared to lose on the quarter, on the month. Keeping track of that, and most importantly, setting those maximum limits, so you know in your mind you're never going to go over that. So you can accept the risk before you go into the trade. You can accept the risk before you go into the day, the week, the month, the quarter. You say, listen, it's a new quarter coming out. I'm prepared to risk whatever that number may be. That's my worst case scenario. Am I comfortable with it? Yes. What does that mean, worst loss per month? That means X. What does that mean, loss per day? If I'm day trading, it means X. Fine, there's my loss. How many trades am I doing in a day? How many trades am I doing in a quarter, a month if I'm swing trading approximately? What's my max loss per trade? Great, fine. There's my boundaries. I now feel comfortable being able to trade within my boundaries and know I'm never going to exceed them. Because the last thing you want to do as a trader, guys, is to say, listen, at the end of the week, or the month, the quarter, going, hey, that's way more than I wanted to lose. And then you're really on the back foot for the next quarter because you feel like you've got to get that back. All these negative emotions start to come into play. So this is my, big sort of feel for risk management. I know we could go into much more depth about this, at some point, but I really just wanted to grab a couple of tips that just would perhaps just stop anyone getting into that awful scenario where you've just lost more than you expect. Anyway, stay tuned, guys. In the next video, I'm going to talk more about some general tips about loving trading, becoming a specialist in trading, learning how to switch off, dwelling on mistakes, being honest with yourself, real sort of good discipline kind of stuff that I love. And if you're interested in this kind of stuff, you'll like it too. Trading discipline, psychology, all that kind of stuff. Like the video if you want to see more of this kind of stuff. See you in the next one.